Hi, I'm Phil Anderson and welcome to my channel. I've been a property investor now for over 30 years and I've watched investors continue to make the same common investment mistakes. There's so many dirty tricks in the real estate industry and it's all caught up in a whole heap of sales hype. I want to cut through that sales hype and help investors avoid the common mistakes. I hope you enjoy the following content, but please remember to like and subscribe. Welcome listeners and viewers across the nation. This is another episode of Street Smart Property Investing, where we have a look, as always, behind the headlines and look past all the sales hype to uncover what's really going on the ground in the Australian property market today. Now, this is going to be a really interesting podcast update because what I thought was really relevant was, what's going to happen in the Australian property market looking ahead in 2021. Now, none of us have got a crystal ball, but what we do have is a finger on the pulse every day. So what I'm hearing regularly from property investors is what's going to happen, Phil? Is this momentum going to keep going forward? This pace that the Australian market is working at such a broad level, so much growth at a broad level, will we see this continue in 2021? Now, as always, I'm joined by a couple of the seasoned professionals, some of my most trusted advisors in different areas of the Australian property market, Mr. Trent Durrington and Mr. Gordon Ruddy. I'm going to cross over to these guys in just a second with a couple of questions, and we're also going to go, over into the market. We're going to deep dive down into one of the busiest postcodes in the Brisbane area and talk to a high energy agent that is just, his sales volume is breathtaking. So we'll cross over and have a talk to Pete at Sunnybank Hills in just a second. Trent, let's start with you, buddy. What do you see, mate? What do you think is going to happen through the rest of this year?
Oh, well, there's pros and cons. We've spoken about weekly just around the shortage of land. That continues to be a real problem. But what's sort of raised its head now is due to the impact of the amount of construction. Several of our builders are starting to panic because of supply of materials, trades. So much so that it's almost getting dire. So we have clients with dozens of houses currently under construction. I'm just thankful that they've got fixed price contracts. Build times are fixed. It's not good for our builders, but that's what we do to protect our investors.
Well, it takes all the risk off the investor, doesn't it? And a lot of people don't do that. It's a very rare thing. Most investors have no idea about those particular conditions that you put into every one of those contracts.
That's right. So it's going to get worse. How's it going to play out? I think it's a bit hard to tell. I think it's the supply chains of materials coming out of China, a whole range of different things. So there's no question there's going to be some price escalation in building. Whether it's 5%, which is a lot on a $250,000 contract, might be as high as 10%. So you got land escalating in price, because that's a supply and demand thing, and now you've got construction costs going up. So, it's not a week goes by that something doesn't come slap us in the face and bang,
Sure.
It's a quickly moving market or target. So interesting time for 2021. I mean, the underlying factors about the areas that we target, the population growth, you just hear about people moving into those towns. The yields just continue to get stronger. There's so many positive things. I guess I'm just touching on a couple of
the moving targets, right? There's moving targets as always, and supply and demand really does set price movement and challenges, and the need to constantly update and navigate the Australian market. We've just finished a quarterly State of the Nation report, an internal document that we use to try to audit the Australian property market to see what the land, the bill costs, the cash flow for clients. We're just really trying to understand the market. And if you looked at the numbers, my gosh, you get really excited by what the cash flow position is, but then you also realise the actual execution is so damn hard. On your own, you're pretty much stuffed, mate. Unless you've got a team and relationships and contacts, you're really stuck on the sidelines.
Yeah, 100%. It's your our internal document there. Although it is a quarterly document for us, it's moving so quickly. Estates are filling up and running out of land. We might have to consider doing it monthly.
Yeah, no, that's a real pleasure to hear you say that, mate. Gordy, just over to you, mate. On the investor side of things, and once again, you saw the document. You helped us look at it through the eyes of investors. You've become the master of understanding, through the leverage of technology as well, but how to run the cash flow for a lot of your clients, helping the investor understand, what's the impact going to be on their pocket. And it's a good news story when it comes to the investors, based on what we've seen in this latest audit. What do you, mate, obviously it's got to be exciting for investors.
Very exciting. I think it's a great time for investors. It's a time, though, that, I was just thinking as you guys were talking, a little bit off topic, but like, Karen, my wife's she's a fitness instructor, and she does a class which is a body balance class. And the little thing she uses in that is, when she's talking to them, is we don't have time to rush.
I like it.
And I think about my investors when I say that, is that right now they could get so excited and rush in and do something that, emotionally that they shouldn't do.
Sure.
Now's the time, you just mentioned it, is to get the team behind you and make sure you're making some great decisions, because there's opportunities out there. And I know it's getting harder, but if you can surround yourself with some great people, which we have in our, in our circle, we've got some just people with, just years of experience. And I think as an investor, that's what you've got to do. You just got to, just slow down, make sure your ducks are in a row. There's opportunities. There's always opportunities out there, but we've just got to be very selective of what we do. And, Trent spends so much time, dealing with builders and developers, that we've got the opportunity to make sure that we can pick the eyes out of what's there.
Sure. Well, look, I think the thing is really interesting. You touch on that whole idea of don't rush, because I think what happens is in times like this, when it's a fast moving market, there's a lot of confidence in the market. And the added issue is that most properties that people test and run the cash flow on it looks pretty good because interest rates are so low. Even the average stock looks pretty good. Even the bad stock doesn't look as bad as it used to. It's not hurting you too much out of your weekly holding costs. But my gosh, that's not an excuse to get into average stock. No. And if you can go in easily and buy properties at the moment, guess what? You're not in a hot market, because if you're in a hot market, you certainly can't buy existing stock, which really isn't a good fit for most investors these days, since how they've changed the negative gearing laws, and so much of the cash flow benefits go hand in hand with brand new properties. But when you start really focusing on the optimal stock for an investor, and in that brand new range, and you've got challenges with builders and land supply, etc., when you're working with those clients, Gordy, there's certainly a need to understand those elements before you know what property to even target. What's going to work best.
Yeah, you've got to understand that, because you just say at the moment, an average property, you look at it and go, that's not costing me much. But we've got to realise that whilst I really believe interest rates will stay low for quite a number of years, there is going to come a time when they will start creeping back up. So, we've got to think about that and make sure, let's get that cash flow position so strong that, we can handle a few interest rate rises, and we're still going to be in a position where, we're better off for having that property, rather than going, okay, well, for the next 2 years we're okay, but in 3 or 4 years' time, all of a sudden it's back to costing us money. We could, we can buy properties today that'll stay cash flow positive, basically for the whole time that we own them.
Well, look, I shared some of our audit over the weekend, the report that we've just sort of completed over the weekend. I started sharing that as early as Friday, jumped the gun, talked to an investor that had probably 7 or 8 properties, a range of different, sort of thoughts about how they were going to move ahead. What they're starting to now investigate is the idea, because the older stock, the stock that's now 12, 15 years old and depreciation's running out and so forth, they're now starting to think, well, potentially because those markets are quite liquid at the moment, selling out of those markets, coming back into markets where we know the land is short. It's yet to get the rise that we've seen as it's been coming out of Sydney up through Port Macquarie, Coffs Harbour, etc. It's not just the floods that are rising; the land prices are rising as well at astronomical pace. What we've seen when I did this exercise with the lady on Friday was that by trading out a couple of old properties with, good properties but not great properties and into what I think is very exciting stock at the moment, she was instantly better off by about $1,000 a week on a cash flow perspective, right? She took the equity out of 2 older properties, brought them into 2 new properties. The cash flow, even at 100% on those properties as we tested, is over $200 a week, positive cash flow at 100% finance. When you start putting these things together, for an investor to run these numbers, Gordy, to really just think about the plan first, it's so important, so important right now. So tell me a little bit about the profile of your investors. Are they open to the idea of moving into particularly Southeast Queensland, which I think is just in such an optimal position at the moment? Are people receptive, as we have said in previous podcasts, to this remote investing idea?
Well, I think it's more than receptive. I mean, it's almost like that's where the mind's going. People out of Sydney and Melbourne, it's not a stretch for them to do that. They see what's happening and they see the opportunity. So it's not about trying to convince somebody that that's something they should do. I think it's obvious to them that that's an area for them to definitely investigate.
Well, I think a lot of people have been looking at Brisbane. I know you and I have had many conversations, mate, and 4 years ago we were sitting here going, now Brisbane's got to be next on the list. It's due to come back into this growth phase, and pretty much we lent into that, I reckon, by the end of 2018, the start of 2019, we said this is going to be the prime time for this Southeast Queensland market. Of course, then we had a Banking Royal Commission, a federal election and COVID and whatever. It's kind of overdue for growth, Southeast Queensland.
Oh, 100%. Yeah, it's probably even earlier than that, Phil, but, it's the way it's escalated and where it's gotten to now is just unbelievable. Yeah. So, I relate it to Sydney, specifically Western Sydney pricing. When it ran, lots weren't going up by 5-10% a year. They were doubling in price.
Yeah, it's crazy.
I got a mate who's got a site out at Western Sydney, and he was doing his feasibilities at 260,000. As a net figure, and that land's now selling for 450. When the market runs, it can really run. So, and they were seeing that in Southeast Queensland.
Well, the interesting thing is, and I think the thing that people don't understand, mate, is there's this balancing of scales. Like Brisbane property prices are probably never going to be Sydney property prices. We understand that Sydney property prices are probably going to set the bar. Maybe Melbourne will challenge it at times, but Sydney and Melbourne are different animals to what Brisbane and potentially Perth are. Brisbane is probably always going to balance back up and come in at around that 70%, maybe 60-70% of that price. And it's just undercooked at the moment. It's got to me, I think there's $250,000 worth of growth in Southeast Queensland in general over the next few years.
Only thing I'd say there, mate, too, is Brisbane is becoming a destination city.
It's underestimated.
The amount of infrastructure, private and public, and then you throw in the Olympic Games bid. So just going back to that ratio, 60-70% that it's traditionally been, it could challenge it. Could challenge it, mate. Yeah. And post COVID, the people living in those Sydney and Melbourne have opened their eyes to Southeast Queensland and the lifestyle. So it'll be interesting. It's too early to tell yet, but it'll be interesting.
Well, the thing is, I think when people think Brisbane and talk Brisbane, and even the economists and the banks are saying that, Brisbane's probably likely to get 20-30% growth over the next, sort of 2-3 years. What a lot of investors misunderstand is that the best growth areas aren't in Brisbane itself. it's Greater Brisbane. It's those areas around Brisbane and southeast Queensland, the Sunshine Coast at the top end and all the way out to Toowoomba's back on the radar again, right? But all of this Greater Brisbane stuff up in that Moreton Bay region and out around Ipswich and some of those other areas surrounding Brisbane, the price points, the yield, the population growth, the shortage of land, the tightness of the vacancy rates in the rental market, it is brewing, I think, to be just a spectacular market for property investors over the coming years.
Yeah, no, the investor can't get in the market really at the moment.
That's the other
with
challenge,
the
right?
level of owner occupiers, obviously, it's that's really challenging.
Mm-hmm.
But for the investors get in, the growth is going to be fantastic. There's no question. It's an exciting time over the next.
Well, it's a bit of a no-brainer when you can get into a market and at 100% finance, it's already paying you money.
Yeah.
You get into a market where, in many cases, and we're seeing it, 0% or not much above 0% vacancy rates where, one property coming onto the market's got dozens and dozens of applications and people are trying to pay above the asking price to secure themselves a house. It's very scary on the ground when it comes to the shortage of property. And as this land gets released, for every block of land, there's, in the good areas, the areas we're targeting, for every block of land, there's a dozen or more people wanting that block of land.
Yeah, that's right. Yeah.
I don't think there's ever been a safer time for a property investor.
I can't imagine. I agree, Gordy.
The biggest concern that, over the years people have had is, well, I have a tenant, will it be rented? And we know even in the areas we've been in, the worst of times when we go through those seasons, there's hardly a vacancy, you know what I mean? And right at the moment, as you say, with the vacancy rates at, if it is that much over zero, there's just, the risk is almost just not there. There's like no risk.
If you go one more layer again, like one of our core strategies, one of the things we've been big advocates of over the years is to just not take away your lifestyle today. Enjoy your lives, have a great life. Don't make life harder by buying an investment property, but make sure that you're fully utilising the tax benefits and leveraging your super and all of those things that we can do without taking away our lifestyle today. But the fear of that strategy can at sometimes be, well, what if I lose my job? Or what about if I haven't got the tax benefits and so forth? But when you've got such great cash flow on these properties, even if your tax position wasn't the same and you weren't enjoying those benefits, you don't have this scary situation where now all of a sudden you're going to have to find $250 a week or something that you don't have. The reality is that even without those tax benefits, you're still sitting on pretty much a cash flow neutral property, give or take.
Well,
right?
I think you would have probably noticed with the figures that you and I were throwing around on, Friday and Saturday. Yeah, we go back 2 or 3 years ago to get into that, positive cash flow position. We're looking at, investors receiving, probably $5,000 a year in tax reduction. The latest figures we're doing to get to that $200 a week cash flow position, they're only getting a tax benefit in some cases less than $1,000 a year. So the cash flow is not so dependent on their tax
That's
benefits.
interesting. I haven't looked at that. We should have a look at that a bit more closely because that's something that I will tune into that because that is a very interesting point because the problem we've got at the moment is people trying to minimise their tax. But I've had to say to the people that are talking to me, please, we'll do the best we can to have the best profile properties and all of those things will be in mind, but they're just so cash flow positive. Tax is just something that's hard to minimise unless you get into these terrible negative gearing or negative geared properties that are terrible cash flow and so forth, but that's just, you're hurting yourself to try to save a bit of tax and no one wants to hurt their lifestyle to try and save some tax, right? Look, just one more thing, Trent. Just on the topic of moving ahead. Of course, we're in southeast Queensland. We're looking at some really exciting land developments and so forth. Are there areas now that are rapidly becoming? There's no land left. Is there pockets of it? I know we mentioned like that.
Oh, there is. Yeah, well, and they're normally the areas that we sort of target. Is at our premium level, and that's based on geography. And water and restrictions and environmental. But councils are quickly being proactive in expediting DAs and understanding, okay, what infrastructure, what land can we look to rezone quicker, in which direction do we want the new communities to build. So that's all happening in the background, no question, which is exciting for us. And you've heard me say all the time really, I'm a big fan of jumping into a master plan community very early, where sometimes the numbers aren't quite as cash flow positive, but typically you always get that much bigger equity uplift early in that cycle. But it all different levels of entry level. There's great opportunity and cash flow currently.
Yeah, unbelievable. I think it's shocking, quite shocking for the Southerners to see what's happening. And, it's not all about Southeast Queensland. We look nationally. We're looking in all the areas of regional Victoria, regional New South Wales. We're looking through regional Queensland. It's just, at the moment, Southeast Queensland's just, it's looking better and better by the day. It's just crazy how quickly it's turning around to be. I don't know, it almost feels like it's so obvious at the moment. I haven't seen such an obvious time that it's narrowed down, even though...
It's worth mentioning too, mate, that's through apartments as well, through Gold Coast, Brisbane, Sunshine Coast. The vacancy rates are equally as low. So there's in all sectors, there's a shortage of housing.
There
There continues to be a real problem with this rental crisis coming.
Yeah, mate, I don't know how they're going to fix that. Well, let's cross over and have a talk to Pete, and we'll see what's going on the ground in one of the hottest Brisbane markets. This gentleman is one of the standout agents in the whole of the LJ Hooker network and one of the busiest offices in Australia. I know the sales volume sets all sorts of records. They've won all sorts of awards, but he's also one of the nicest gentlemen that I've met in the whole of the LJ Hooker network. He's an absolute champion. How are you, Pete, from Sunnybank in Brisbane, guys? Sunnybank Hills in Brisbane.
Fantastic. Couldn't be better.
Crazy, is it, mate? The weather is just insane.
It has been, mate. It has been. But
you're busy, you tell me, mate. And I know that you are, because every time I talk to anyone in the network, all of the bigger profiled principals in the network still hold you in very high regard, and your office, mate. You are an absolute powerhouse, that particular office. How are things on the ground at the moment?
20 years of real estate, I've never seen the market with so much confidence in it. It is just so confident it's not funny. We always transact. I sort of hate that question. How's the market? And, the market's always great because we transact. We don't sell price. We sell situation. So, there's only 7 or 8 things we ever market. I always look at it that the difference between a market when people say, oh, price is going up or down. Well, it's not. They never go down. Over due course, they always technically double if you look back in history. But confidence, it either has confidence or lacks confidence. And at the moment, mate, I've never seen it like this. It is so confident, it's not funny.
It's unbelievable, mate. We're seeing it ripple out onto the news stories. I'm sure all the southern buyers are now starting to see, the evidence that this energy is rising in the Brisbane and southeast Queensland, kind of sector. But I think you're probably in the eye of the storm there, mate. That area that you're in is obviously a very hot area, and you've got such a big footprint. You've got a lot of agents. You've got a lot of fingers on the pulse. How are you? Is the listings anywhere near keeping up with the buyer demand? How is that ratio looking?
Mate, good question. A lot of guys are sort of saying, geez, there's no stock out there. Mate, we've been listing very, very well. There's definitely stock coming on, and people's situations, jumping on the bandwagon with the confidence and all that. Mate, from a personal point of view, I've listed about 25 auctions in the last 5 weeks. So, mate, I'm fully booked out for March and April. So now I'm stocking up. I'm loading May up now. But I'm far as booked out as my furthest property on the market to go to auction that's signed up is the 4th of September. So, mate, it's busy. And it's funny because there is still people out there in the market saying what you just sort of said, Phil, there, that they're waiting for it to implode. I think this is the start of something for the next 2 or 3 years. I really do. And then if it sort of slows down a little bit, mate, they're talking 3032 Olympics is nearly just virtually one tick away from being guaranteed. Mate, if that sort of kicks in as well, I think we're in 15 years of unbelievable times, because then all the infrastructure has to get built for that, jobs.
We agree, Pete. We absolutely agree.
Yeah. So I don't think there's a better time to be buying real estate anywhere, but especially in our part of the world. Sunny Coast, Toowoomba, Gold Coast, and everything in the middle, that big triangle of pure real estate gold. I think it's just the best place to jump on.
Mate, I think you're right. And it's always been a strong market. There's always been good bones to that market, but this is just a special circumstance, I think. I think in all honesty, mate, we've looked at that general, golden triangle or whatever, and we've thought it's a little bit, we expected a little bit more in the years just gone by. We think it's underpriced, mate. We think it's underpriced today. We also think this is the perfect opportunity, all those perfect storm of things coming together with interest rates, confidence, population growth. You're the big winners, in all the flow of people from the south to the north. It's just this best window of opportunity for southeast Queensland. But, mate, there's a whole range of infrastructure that most people don't even know about. Billions of dollars going into that city. It's going from being, maybe a city that gets underestimated and probably still is, to a city that's really coming of age, that quality of infrastructure. And it's only going to keep going with the Olympics. So I think you're right, mate. I think we're looking at 5-10 years of really special trajectory. And then it's not, the poor cousin. It's a real player.
Yeah, well, mate, that's why I sort of said 15 years, because I 5 to 10, well, there's all the labour component, all the wages of, because it always starts really with the real estate. And then if the real estate market's busy, then your builders are busy, your carpenters are busy, your carpet people, your taps, everything. So if they're going to be building high-rises and stadiums and all that, that's going to filter mega dollars. Then we're going to be put on the map globally. So after 3032, technically there's always been a boom after the place has been put on the map around the world. Sydney did it in 2000. Don't know how well Greece went after its Olympics, but anyway.
I don't think they've still paid for it, mate, so they got a problem.
Yeah, so, the Greeks are smart. Crack up a debt and just don't pay for it. But what I'm trying to say with that, mate, is that our infrastructure won't be wasted. We're a crazy country and a crazy nation of sport, and all the stadiums will be continuously used and everything, so it won't be wasted. So that's why I think we're a bit of a hot spot, mate. Apart from today, the weather's normally great. Brisbane to the Gold Coast is an hour away. You've got the Toowoomba Airport that's been built. You've got all the train stuff that they're doing, the interstate link and all that. So, mate, things are looking good.
And Pete, what about on the ground? You recognising interstate migration? You got Southerners. Would you see an increase in those buyers in your portfolio?
We do. You guys are better at this than me, but I think the massive interstate migration from Sydney and Melbourne is not as crazy as what it's getting made out to be. Yes, they're coming. Don't get me wrong. I had, 2 parties registered to bid online on my auction sight unseen on Saturday, one in Melbourne, one in Sydney. But Phil sort of said it's the perfect storm. You've got the interstate migration that is cashing in. You sell something down there for a little too better for $2 million. You come up here, you buy a beautiful house for $1 million. You can buy a unit on the coast for $500,000. You've got your little holiday place or your investment, a couple of nice cars, and you're living nice and rosy, sort of debt free. But I think the expats have really been bringing a lot of money back to Australia as well. So there's that factor. The interest rates
doesn't get spoken about like it should. You know, it's almost that some of the media groups will grab on some of the negative. You know, a hole coming because of the immigration.
There was one guy on the news last night, an expat. I don't know if you saw that, Pete, but there was a guy on the news last night talking about Brisbane auction weekend and whatever, and there was one expat came back from Germany and bought 3 properties. You know,
because they've got they're over there. Most expats are overseas on huge coin. You know, that's why they're working overseas. Why would you work overseas, not in Australia, and be overseas? But I just think that the thing that made it the perfect storm, and I don't know if it was right or wrong, but was the Reserve Bank coming out and saying that interest rates won't be lifted for 3 years. It's pretty hard for your Reserve Bank after 6 months or 12 months to turn around and do an interest rate hike when you've come out and categorically said there will not be an interest rate increase for 3 years. But in saying that, if interest rates went up 1%, which I can't see that happening for a long time, it's still not the end of the world. You know, there's rates fixed at 1.99% for 5 years. So, you know, it's been a massive injection of confidence.
Yeah, mate, we agree. We're seeing it, mate. We're seeing this ripple and we're seeing this, this interest build, but also we're seeing people being able to do real life comparisons, you know, as we're seeing the markets change in even regional New South Wales, where people have spilled into the Port Macquaries and those markets. They're now looking at the price points in some of those markets and comparing it to many of the suburbs, you know, in Greater Brisbane and stuff, and it presents very attractively. It's a, you know, incredibly well priced market. You know,
when Sydney and Melbourne was, if you want to say the word boom, was booming a couple of years ago, mate, we were transacting very well. But those double booms that Sydney and Melbourne had, we didn't have. You know, everyone kept on saying, "Oh, the bubble's going to burst in southeast Queensland. The bubble's going to burst." I just kept on saying to people, there hasn't been a bubble to burst. I don't know what you guys are going on about. You know, there's no bubble to burst.
Yeah, well, mate, I think people lose track as well as it's not just one market, right? So when Melbourne's doing something or Sydney's doing something, it's very rare that Brisbane's doing, you know, the same thing at the same time. These markets all move in different, you know, sort of different stages and times and at different, years. There's something else going on somewhere in Australia and there's always somewhere great to buy. This is just coming into the right time. I think the optimal time to buy in Brisbane and southeast Queensland. Yeah. But, mate, you're also not just known for, you know, the sales that you do, and you're pretty humble when you say that, you know, you've got quite a few listings at the moment. You've got a big machine, you're top of the game with professionalism, and people come looking for you, mate, really. When it comes to selling, you know, you've probably got a bit of an unfair advantage because you're known for getting, you know, really looking after that vendor, and you do an amazing job in the way you market properties. And I know you're too humble to say it yourself, but that creates a bit of an unfair advantage because you're known for many suburbs around as being, you know, the optimal, you know, team to engage if you want to sell a property. But my listeners mostly are, you know, obviously investors. And one thing that really stands out is I think you've got potentially, I know you've got the most professional because of the software and the, you know, the effort you've made in protecting the property investors through your property management service, but you've got an absolutely massive property management team and division. You've got a real finger on the pulse there. Tell us about that side of things, mate. And brought that in from a property management point of view. So we've got about circa 2,000 managements. Less than 0.01% vacancy. Arrears are next to nothing. I think we're renting 2 properties a day at the moment. So, mate, I'm all about, you know, I hate the terminology customer service because everyone always provides a service in whatever industry it is. Why is someone successful in one industry and someone's not? Why is someone going broke in one industry and someone's not? Why is, you know, you go into, and I don't want to pick on anyone here, but I'll use Qantas, if you don't mind me saying, a brand, and a good Australian brand. And I love Qantas. I fly Qantas, the big kangaroo. But why do you get on the big kangaroo sometimes? And you know, you just,
you'd turn around and say, I'm never, ever going to fly with any other airline apart from Qantas. They are amazing. But then the next day you fly home and you sort of say, oh, shit, no, that was terrible. So it's
we had that with a meal they served us the other day. Gordy was building up the meal they were going to serve us coming back from Melbourne, and then they offered me a salad, and I'm like, okay. I said, sorry, sir.
They must have recognised something.
Sorry, it just so happens.
But mate, what I was saying was, it's not customer service, it's customer care. And whoever cares is the one that was never, ever forgotten. Whoever doesn't care is also not forgotten. But, you know, you can experience that experience and you say, I'm never going to go to bloody David Jones again because of that department, because that person didn't care. But then you go into the next department to buy something and they virtually carry it to your car because they care.
Yeah.
So it's the customer care component. And, mate, I'm huge on that in the whole Sunnybank Hills business. I'm huge on that in the sales division. I'm huge on that in the sales division. And then I'm huge on that in the Peter Florenzos team because, yeah, I am a Prince and one of the directors, but my true love is to still caring for people on the front line of buying and selling. And even, believe it or not, managing. I'm doing management as well now because people sort of that, yeah, and I thank you for the nice words before, but people do ring me up and say, hey, Pete, or Flossie is one of my nicknames, said, mate, we want to rent out one of our investments. Who do we talk to? And so they just sort of, I say, well, mate, I can do it on the front end with my personal PAs or SAs, and then the back end of the business looks after it. But going down the path of property management, Phil, we've got around 2,000 managements at the moment. We are on a massive, massive growth spurt. So we want to get to, you know, a true dream would be 25,000 managements. If we don't get there and we get to 10 or 15, well, so what? It's still bloody big. Yep. So, mate, we're going a massive acquire at the moment.
Well, mate, the one thing about that target is a lot of people wouldn't handle it. They wouldn't be able to scale it. But I've seen the infrastructure and the level of technology and the level of automation and the level of just effort that's gone into making sure that you're doing things that most don't even know exist in the area of property management.
Because, mate, you've got to go with the times, Phil. You've really got to go with the times. And our business is all run with an app by the name of Our Property. And if it wasn't for Our Property, there's no way we would be able to grow to the scale that we are. But the other big killer in businesses is profit. And, you know, if you keep paying massive wages out when you don't have to sack people. You don't have to sack people because as you're growing, other positions come up. So you can just, you know, we had our leasing lady that's been with us for 25 years. We couldn't get rid of her. You know, we could not get rid of her. She's such an amazing person. So she's now one of our frontline guys of customer care and relations because she's so well loved and known. And so, mate, you know, and you just grow from there. But the app's brilliant. It doesn't lie. It forces people to pay their rent on time. Landlords won't get ripped off with quotes from tradies. Not that tradies do that. But it's just all up front. You know, you can't get from A to D without B and C getting cross-checked and done and then nipped in the butt. Because one of the biggest problems in property management is time management. A quote, oh, we want a second quote, that one's too dear. Well, with the platform, it just automates everything. So automation saves a lot of time and also cleans up the industry as well. You know, because you do have, you know, a lot of people say, oh, bloody tenants, they don't pay their rent on time and this and that and whatever. Mate, tenants are human beings and they should not be treated any other way than anyone else. And just as much as you've got problematic tenants sometimes, most tenants are only problematic because the landlords are problematic. You know, they don't want to fix up a leaky tap or whatever. And then that's when the tenant says, well, stuff, you're not going to pay me rent for a couple of days.
Well, it goes another step, Pete. It goes another step because what you're talking about there in saving time and so forth, you're really saving the landlord time And a lot of those issues that do arise from the tenants is because in many cases the property management team hasn't really been onto things as much as they want to be, you should be. Then they're turning it around to the landlord and saying, oh, they're a bit slack on paying their rent, but they just haven't had those little prompts at the right times. Mate, it really is a dance, right? And that dance needs to be choreographed, and human error is, you know, a factor that's always going to happen. Your app and the way that you've built your business just takes a lot of that human error out of it.
And mate, everyone's always going to make mistakes. We're all human. We do make mistakes. But if you can minimise the amount of mistakes, well, it just speeds up the process for everybody.
Yeah, mate.
People are so time poor these days, you know, in sales and rents and everything. People just, you know, are so time poor. They just want to say, there you go, do it, fix it, put the money in the bank, done.
Yeah, I love it, Flossie. Look, mate, one thing about this stands out is I don't know that there's a busier agent in Australia than you, but every time you give me 5 or 10 minutes, mate, I feel like I'm the only person in the world. You really do engage and you're genuine, mate. Your passion just shines through. It doesn't surprise me at all, the culture that you've built in that organisation. So congratulations, buddy.
I appreciate that. I always say you've got 168 hours a week. It's up to you how you utilise those 168 hours. You can be positive, negative, bitchy, shitty, whingy, whatever you want, but they're going to come and go. So it's up to your own personal headspace how you're going to treat them.
Well, I reckon you break them down into 15-minute chunks, and whoever's in front of you for that 15 minutes, mate, I reckon they feel like gold.
Oh, mate, mate, I appreciate that, but mate, if you say something, you're going to do it. You got to do it. Like I've got 4 auctions coming up this Saturday. I had 10 open homes on the Saturday that just went past, and every single person, like I can't be at all once, but my team's here, there, and everywhere. But I'll always do my best. But mate, I reckon I've got about 100 to 150 phone calls to get done from Saturday, and every single person will get a call, and every single person on Saturday got told, thank you very much for coming along to the open home. We'll give you a call on Monday or Tuesday to get some feedback. So there's 2 reasons why I do that. Because one, I'm making myself accountable, but it breaks my heart that in the current confident market we're in, that when I do make these calls on a Monday, buyers just turn around and say, wow, I really appreciate your call. You know, real estate agents are really, really taking the piss out of this market. I shouldn't, sorry, we're live.
No, that's true, mate. I know. Call it how it is, pal.
They're taking the piss out of this market at the moment, you know, and the other thing that's really infuriating me at the moment is sold in a day or sold off market. Put it to market, let them fight it out and go from there. You know, I had an auction that I sold it for 470 grand over seller's expectation.
Crazy, right?
And, you know, so mate, I sold it to the bloke that bought it on the Monday. I launched it on Monday. He saw it on Wednesday, and he gave me virtually 150 grand that day more than what the seller would have taken.
Yeah, wow. That's a really good point, mate. That's a really, really good point, because there are a lot of properties that don't get to market, a lot of people that are taking offers before they get really test what the buyers are prepared to pay. And most people are just taking the low-hanging fruit, moving on to the next one, you know, just locking away a sale, moving on, right? So that takes a lot of genuine care for the seller, mate, that you take.
Can I just say this, even for the landlord, and I know I'm taking up too much time, but just with the...
No, go for it, mate. You're the guy that told me you only had 10 minutes, Pete.
But, mate, I get passionate. I just love what I do so much, and I get passionate because I care for people so much. But the other thing is, mate, we've got one property at the moment. I'm just going to use this as an example. For rent, it's up for rent. 200 viewings.
Wow.
And circa 50 to 60 applications for one property.
Yeah, crazy, right?
And people want to pay 6 months in advance and, you know, $100 more, $150 more and all this and that. This is what I can't understand, Phil, that normally when there's ridiculous confidence in the sales section and interest rates so low, why go bloody rent? It's a repayment that you can get. But both parts of it, sales and rentals, are both going through the roof. So jump on the tsunami and go with it.
Yeah, absolutely, mate. Well, you're in the eye of the storm there, pal, and it's an absolute pleasure to always talk to you, and I appreciate you giving us a little bit of your time. If you don't mind, we might cross over every few months and have a little bit of an update from you, mate.
Here for you boys whenever you want me.
You're a legend.
Good on you, Pete.
Take care, Pete.
Good talking to you, mate.
Boys, stay
Cheers.
safe.
See ya.
Bye.
How's that for some energy, boys? Unbelievable, right?
Yeah, good energy. He's
He's
168 hours in a week. I love it.
Yeah, no, he's impressive. And he's got an impressive team. He really does. You can just feel the energy around him. You can feel how genuine he is about his approach. And I love that little point that we took away with regards to, you know, when you think about it, there's a lot of agents that are selling before properties are getting to the market, and they're getting above the buyers, or sorry, the seller's expectation, but he's really challenging how far can he take that, which is a risk for a seller and a bit more work for the seller, but obviously he's getting a result.
Big takeout for me out of that is, you know, great time to invest. Major shortage of rental accommodation.
Yeah.
Rental properties. He's 200 people on the list, 200 inspections,
50 applications.
50 applications, 6 months up front, $100 more a week.
Yeah.
You know, and these numbers aren't going to dilute overnight.
No.
So it's a great opportunity to invest.
Yeah, and he's in a, you know, existing, you know, sort of highly kind of developed area, so that ripple kind of rolls out. So if you're looking around those markets as to where there is anything that provides our sort of opportunities, you know that ripple just really does come at you from all angles.
Yeah,
you know?
That's right. Yeah, it's a growth pocket there. He is a little bit land banked as far as new housing development in that area, but you know, we've provided house and land opportunity in just south of his area, and he'd have a lot of houses there under rent, but again, I keep saying it's a great time for the investor.
It's crazy. It is crazy. We're going to look back. I think we'll look back by the end of the year, and you know, be shaking our heads. You know, even just, you know, in those months as to how much has changed, how much has happened. You know,
but just the last, as we start to wrap this up, is just you know, as the investor, you still got to be careful. You know, have the team around you, because there are things are quickly moving, you know, coming back to construction costs and delays, all those, a lot of I's, lots of T's have got to be crossed to make sure you're getting that right package.
Well, mate, you could jump in any one of these markets that are booming. Now, they're booming because the homeowners are going into those markets. If you go in there as an investor, you know, Pete's, you know, median house price is probably not far off $1 million in his area, right? Now, they're going to be paying, an investor could be going in and paying, I don't know, $50,000 or more in stamp duty to get into a property like that, and have not enough yield to really make those properties work as an investment property. But I know he'd also have properties inside of his property management catchment area that would be able to have a very different profile and a very different cash flow analysis. So good, it's all about cash flow, right? It's all about doing, like you said right at the start, you know, don't rush, get your plan, get your strategy.
Yeah, I mean, what I love about what Pete said was his philosophy is caring for people. And you know that my biggest game or goal for my investors is that I have a great experience. That's what I really want my investors. And that's exactly what you're just saying there. We've got to, you know, whilst, you know, we don't want to sit on our hands because the market's moving, we don't want to rush in and just make that wrong purchase. And many investors could feel that way and just go, well, here's an opportunity, I'll jump into it.
Sure.
You know, we've got to take our time. We've got to make sure it's the right, you know, it's the right time to move. It's the right property to move on. And, you know, with our team, we can create that. We can find the right opportunity without rushing in and making a mistake. The numbers just have to work.
Look, behind the whole investor-proof model is a recipe, right? Now, we try to make it easy for the investor that they don't have to understand all the ingredients, right? Just in your section of it, Trent, there's probably 70 different steps of processes and checkpoints and, you know, spreadsheets and all of this analysis. And then on Gordy's side, working with investor, probably the same amount. On my side, there's all these ways that I want to screen the national markets, narrow it down to find exactly what's the right properties to target in those areas. It's a lot of things, right? From top to toe, there's a gazillion little points that we check off, where most investors doing it on their own do it in 2 steps. You know, they find a property, they start with the property, which is exactly what you shouldn't do. Then they come back and say, can I get a loan? Right? It's really 2 steps in that process, whether they get the loan first, then target the property, or get the property, then try to get the loan. And that's pretty much the 2-step process for most investors, and they wonder why they don't have a great investment experience. Knowing where you want to end up, it's all about understanding and respecting the fact that these are big investments. You know, even though it looks great on paper as cash flow, you need to be making smart choices, and that will really set you up to be someone who ends up with a maximised portfolio, or you end up sitting back regretting the idea that you ever got started in property investing, like unfortunately too many investors do. Thanks for joining me, boys. It's been another good session. You got a last thought was that coming to mind there, mate? Or
get in the market.
Get in the market.
No better time.
Well, mate, it gets pretty simple and pretty clear when you start going, this is just not a time to be wasted. It's a time to get your plan, know what you're doing, get buyer ready, and get in the market. Thanks for joining me, boys.
Thanks, Phil.
Talk next time.
Thanks, Trent.
Thanks for watching, guys. Don't forget to subscribe, and also feel free to leave me a question. I look forward to helping as many property investors as possible. Take care, and we'll talk soon.